Welcome to TradeTheMBI-02-Extreme, and this is part 2 of our discussion of the extreme histograms and how it's read and used to interpret overall price patterns and projections for retraces in price. And what we found in our last discussion, we looked at the collapse in '09, and we fast forward to February of 2010, and after a steep decline that was recorded both on our trend indicator, which the candles turned red, but we saw with the dip below the red line on the histogram that these lows would need to be retraced on any up move, and in fact they were, but they were retraced on a higher histogram, which meant that you had an excellent propensity for a nice move. Combine it with our MBIs, the Morgan Buy indicators, and sure enough, it led to a significant incline. But then we reach a point over here, middle of March, where the histogram begins to go positive, and it created the histogram to give us extremes on both ends of the scale. Now, typically what we look for is a couple in a row of the histograms, and then for the histogram to begin to fade. But what we like to do is we mark the low of that first move above the positive line on the histogram as a target point for where we expect price to retrace to when the time comes. And as we scroll forward, we can see that we then make a lower histogram. Now, we also utilize a couple of other indicators, our shakeout indicator as well as our ratio histogram, to give us exact points as to whether or not we would believe that this is the end of it. But if we just assume for now that, this is a general target point, we're still looking for the retrace of each of the different bars that have a histogram that's positive. So in the next day, sure enough, you get retrace of that one as well as the one before it, but not all the way down to that 1151. And we come across, and then, whoa, lo and behold, we make another positive histogram. And the price doesn't quite retrace, but continuing to make new highs. So at this particular point, you're thinking, well, perhaps the histogram's got a problem. And when we look at our shakeout and our ratio histogram, they would not have given us short signals at this particular point. And we continue to see, though, that price rises. Another dual set of histograms rising even higher, a third one, but this one's lower on a higher, so we would go ahead and mark that one as well. Getting around 1200 here. Well, we get a little bit of a retrace, but price continues to break even higher and explodes into the 1210 range. And we're still looking at 1151. How can that be? Obviously, there must be something wrong. But no, the histogram is taking into account that we're getting more and more extreme. As you can see, these are getting higher and higher, meaning that the odds of a retrace are growing exponentially, actually. And what we can do is we can add another line right up there, because that would clearly be an indication. Oh, well, we got a little bit of a decline that covered both of those. But right back up. So again, hard to imagine that we're going to end up with a decline that's going to take us there. Now we bust even above here, and you can see all the way back here at this 1150, it's seeming as though it's impossible that this market is just going to continue to rise. And then, boom, who was expecting that? It cleared out all of these upper histograms, and then its price shot right back up again, but our trend model had completely flipped to the downside. And we had some spikes that were below the 50 line, which is not bad. Those are typically bullish when it moves right back up from that particular spot. But then the floor falls out, and we can see that this was the flash crash. And so some people say, well, no way to project the flash crash, and certainly wasn't projecting the flash crash, but certainly up here at 1210 and even at 1220, we were still looking for 1150 to be retraced easily based on these extreme histograms, meaning that price had just gotten out of control. And this will happen. Price can get out of control for a period of time. We utilized a couple of the other indicators to give us exact entry points as to when we would be able to take advantage of shorting that. But even in between each of these runs, from a practical trading standpoint, typically I look for about 80% of the retrace of the full marker, in which case most of these did that within a day or two of each other. But from a longer short standpoint, once we got into these extreme levels up here, with a dual count where it says differential being plus 23.5, that's extraordinarily extreme. Doesn't happen very often, and you knew that this entire rise at that point was just being pumped up so that larger players could exit. And that's really what the reflection of these histograms points to, is that the big players are really selling inside of people and they don't realize it. And price continues to rise and they think it's going to continue higher forever. And in this case, obviously, it became an exacerbated move and it retraced conveniently to the last point at which we had our dips below the 50 line, and they almost came to the red line. These were just short of it on this trend change down here, and for the flash crash, price moved all the way to that point. So again, from the extreme standpoint, hope this gives you an idea of how accurate we can be with projecting returns, and these weren't based on Fibonacci's or any other numbers like that, but merely how big players in the market were utilizing their positions and their position sizing at particular points, because that's what they're going to be targeting for their own profit standpoint. And I think it's an important way to look at the market and see it from a reflection of people's money and how it's being applied, and that's what the extreme histogram attempts to solve for everyone. Hope that gives you added insight, and in the next series we'll probably go into some more finite details on some of the middle ranges in the extreme histogram. As always though, trade well.